Good afternoon, ladies and gentlemen. On behalf of all of us at SKP Securities, it is my great pleasure and privilege to welcome you to this financial results conference call with the leadership team at HEG Limited. We have with us Mr. Manish Gulati, Executive Director of HEG Limited, and Mr. Gulshan Kumar Sakuja, CFO. We will have the opening remarks from Mr. Gulati, followed by a question and answer session. Over to you, Mr. Gulati, for your opening remarks. Thank you, sir.
We seem to have lost the line for the management. Participants, please stay connected while we reconnect the management line. Participants, thank you for patiently holding your lines. We have the line for the management reconnected. Over to you, sir.
Yeah, good afternoon, friends, and welcome to our Q2 Financial Results 2021 Concall. Mr. Ravi Jhunjhunwala, our Chairman, Managing Director and CEO, could not join unfortunately because something very urgent came up. So he got occupied with that. So me along with our CFO, Mr. Gulshan Sakuja, we'll be handling this call. This is Manish Gulati, Executive Director, HEG. So I'll begin. More than 1 million lives have been lost due to COVID since the start of the year, and the toll continues to rise. We in HEG have given top priority to the safety of our employees and put stringent controls at workplaces, including social distancing, use of masks, sanitizing, extensive use of online interactions, and work from home, etc. These are difficult times, yet there are some reasons to be hopeful. Testing has been ramped up, as you know, treatments are improving, vaccine trials have proceeded at unprecedented pace, with some now in the final stage of testing. As per the recent data from IMF, which suggests that many economies have started to recover at a faster pace than anticipated after reopening from the lockdown. Hence, we can expect a less severe, though still deep recession in 2020. The World Steel Association, in its recent short-range outlook, forecasted that in the current year 2020, the world steel demand will contract by 2.4% due to COVID pandemic, and 2021 steel demand is expected to recover with an increase of 4.1% over 2020. The post-lockdown recovery in steel demand in the rest of the world has been stronger than earlier expected, but it still marks a deep contraction in 2020, both from developed and emerging economies, with only a partial recovery expected in 2021. In the first 9 months of the current year, the crude steel production has dropped by almost 12%, excluding China, which is having an impact on graphite electrode demand. The electric arc furnace steel production was down in some of the large steel producing regions like Europe, US, Japan, South Korea, besides India, mainly resulting from slowdown in demand. The graphite electrode inventory adjustment, which was supposed to get over by the end of this year, COVID has de-accelerated the rate of depletion of these accumulated stocks. Our results in these quarters were impacted due to lower sales and lower graphite electrode prices due to reduced EAF steel production in the rest of the world except China. Capacity utilization for Q2 was about 74%. Since the past year, as you know, the electrode prices have been sequentially dropping quarter after quarter to reflect the market conditions. We now expect the pricing to remain stable and improve from the current levels in the next 2-3 quarters. We expect resurgence in demand from 2021 onwards once the impact of COVID subsides hopefully and the remaining electrode inventories get consumed. The needle coke availability has substantially eased, and accordingly the prices of needle coke have come down substantially. We have always been exporting about 2/3 of our production to more than 30 countries, which helps us in diversifying the market risks. We have seen some recovery in the domestic electrode demand in Q2, which dropped by about 50% in April to June period, with improved production levels at major steel companies. We see a gradual improvement both in domestic and export markets going forward into the next quarter. Electric arc furnace production has seen an approximately 2 to 3% compounded average growth rate over a long term, and we expect this to continue as EAF becomes a preferred choice of steel making due to its inherent advantages over blast furnaces like environmental considerations, low carbon emissions, low capital costs, ease of operations, etc. With our 4 decades of experience in business, we expect to be a supplier of choice to all our global and Indian customers. We have taken significant measures to manage our operations in this COVID crisis and ensure the health and safety of our workforce and team members. With this, I will now hand over the floor to our CFO, Mr. Gulshan Sakhuja, to take you through the financial numbers, and then I, along with our CFO, will be very happy to answer any queries that you may have. Thank you.
Thank you. Yeah, good afternoon, everyone. I will now briefly taking you through the company's operating and financial performance for the quarter under review. The second quarter started on a positive note with a relaxation in lockdown and gradual resumption of business activities. The company gradually increased its capacity utilization to 74% in quarter 2 FY21 as compared to 45% in the previous quarter. For the quarter ended September 2020, HEG registered a revenue from operations of rupees 323 crore as against 233 crore in the previous quarter, an increase of 38% Q-on-Q basis, and 564 crore in the corresponding quarter of the last financial year. EBITDA including other income stood at negative 25 crore in Q2 FY21 versus positive rupees 35 crore in the previous quarter and rupees 174 crores in the corresponding quarter of the last financial year. The company reported a net loss of 34 crore in quarter 2 FY21 as against a net profit of 11 crore in the previous quarter. The performance was encouraged by improvement in the business activity, which was offset by the lower realizations as pricing continued to remain under pressure. Our balance sheet remains robust with a treasury size of about 1,400 crore at the end of September 2020. The company has made a detailed assessment of its liquidity position and the recoverability and carrying value of its assets comprising property, plant and equipment, intangible assets, right of use assets, investments, inventory and trade receivables. Based on the current indicators of future economic condition, the company expects to recover the carrying amount of these assets. The company is operating its business by optimal utilization of available financial resources and also implemented stringent cost control measures across the organization to conserve cash. The company is long-term debt-free and having a treasury size of nearly 1,400 crore, yielding an average return of approximately 6.5% per annum. The company has adequate internal financial reporting and control system. The company is having a mechanism to continuously review and monitor its policies and procedures to adopt with a dynamic environment. Now we would like to address for the first quarter of next financial year. Then there is a possibility a further hit of NRV would come into play.
No, so when you close the quarter in December, then also the NRV will definitely pay as on 31st December, whatever will be the selling price, you have to mark down or mark up the same.
Sir, now the question comes, NRV has to be calculated on that the closing stock we would have on 31st of December vis-a-vis the selling price for the next quarter. For the next quarter means for the fourth quarter of the financial year. Okay. In case if that prices of fourth quarter further deteriorates,
correct.
We have to take a further hit in that balance sheet in third quarter, sir. But whatever the hit that we have taken in the books of accounts as on 30th September, that is based on the selling price that we are having for this third quarter.
Third quarter.
Yeah. Sir, we have to judge and we have to evaluate quarterly basis what is my projected selling price for next quarter or next 4 months or 5 months. Because in the current market scenario, all the orders are in the range of 2 or 3 months, maximum 4 months. So that's why we have to take the call on quarterly basis. If this is my projected selling price and this is my coming the cost of production, we have to take this much of amount as a NRV in the books of accounts in a particular quarter.
Okay, sir. And sir, currently, sir, I think so. As you articulated by you, it is the needle coke prices that have corrected to a greater extent. So, sir, with this fall, has that depressed the graphite prices equivalently, or the fall in the graphite prices have been somewhat less arrested than the impact of the fall in needle coke?
See, the electrode prices were skyrocketed. Of course, needle coke prices also, but the delta between the spread between the prices of needle coke and the price of electrode in 2018 was very high. Now that is getting corrected. That was peak spread at which we were at 75% margins, which is unheard of in any industry, which was unusual and once in a blue moon type of an occurrence. So of course the needle coke prices have come down, but electrode prices have come down even further. But they are actually returning to reality. That is how it has been in the last so many years of our existence, that the spread between the needle coke prices and the electrode prices should be such to be able to give us healthy margins, and rest come from volumes, where anywhere between 25-30% margins is considered good in our business. So that if you have the volumes after expansion, so that will give us good profits.
So that will play out only after in the first half of next financial year. This benefit will not be attributed to our numbers for the December and the March quarter. This is what
Absolutely correct. That's what I said in the beginning, that there will be 2 more quarters.
Two more quarters of pain.
Yeah, 2 more quarters of pain. Exactly. You said it. Yes.
Okay. And sir, for the price trends, for electrode price trends, what have been the price trend for, say, for the month of September, October, and as of now? If we take the spot prices into consideration, what are the trends indicating?
There is still a pressure. If you are talking about the trend, then let's say between September and October, there is not much difference. But when we start booking further orders, there's going to be some more pressure on the price. But we cannot indicate the specific number. But of course, you can always make some estimate from our revenues and capacity utilizations. But please do remember that there's a product mix. We have certain non-UHP portion also in this.
Correct. And for the sales mix part, sir, how much is domestic and export? For the first
one-third, two-thirds. It keeps varying. Sometimes it becomes 35%, 35% India and 65% export. It keeps varying actually. Anywhere between the Indian sales vary between 30 to 40, and correspondingly export sales between 70 to 60.
And sir, for us,
quarter on quarter.
And sir, for us, sir, the key domestic players, our buyers are SR and the Bhushan.
Yeah, SR, JSPL, Jindal Stainless, Tata Steel Authority, and many alloy steel producers like Vardhan Steel, Mukund, Kalyani.
Okay.
So
all across the board, sir.
Yeah. Anybody who has an electric arc furnace in India is using electrodes is our customer. Almost everyone. Correct,
sir. And sir, for the utilization of cash, sir, since Ravi sir is not here today present, so sir, what are we exactly will be doing to do with the cash? Definitely expansion is there. We have put money for the capex. Other than that, any way in which we are trying to reward shareholders, because right now the business sentiments are sour for the industry. So the investors who are there in the journey with you, in what way can they be rewarded?
Yeah, from a reward point of view, if you see last 2 years, the company made a good profit and has rewarded that to all the shareholders in the form of dividend and also in the form of buyback. The payout ratio was in the range of 32-33%. And if you see the trend of last 7 or 8 years, the company has always rewarded to the shareholders and have made this payout ratio to the tune of 30-32%. And once that we come into black, that means once we come into that profitability and come out from this loss figure, definitely we would try to maintain the same payout ratio for the shareholders. And as far as this, yeah, sir.
Sorry. You continue, sir. I am very sorry. I interrupted you.
So as far as means we are expecting in this financial year, means if you see the first half and because of COVID and plus because of this high inventory, we made a loss in first half, and we are expecting that this financial year 2021 from the profitability front, it's a difficult year, but from the balance sheet point of view, if you see that the overall treasury position has been strengthened by 300 crore from March to September, and going forward by March 21, it is going to be further strengthened. And as far as the other business part are concerned, what you just said, we have already evaluated 2 or 3 or 4 proposals, but ultimately the management decided to go for expansion. Now because of COVID and all such factors, so that is put on hold, and we have been reviewing. And once that the market comes into normal capacity utilization from our steel companies comes into the normal capacity utilization, then we would try to put this money and for this expansion from 80K to 100K.
Right, sir. And all the best, sir, to the team, sir.
Thank you, sir.
Thank you, sir.
Thank you.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from Anubhav Sahu from MC Research. Please go ahead.
Hello. Hi, sir. A couple of questions. One is regarding China's graphite electrode production. I think somewhere you mentioned that the UHP grades from China production is of the range of around 80,000 to 1 lakh tons. Of course, it is made from a different raw material source. So wanted you comment on how is the acceptance of Chinese UHP grade in global market now? Is there any marked change in perception over the years? This question is coming with the context that because, if I remember right, it was not seen as a key competitive product for us. So is it that UHP?
I would say, because you see the steel companies need reliability of supply and a consistent quality performance over years. It's very difficult to change. Normally, customers, they need 2-3 years worth of experience to, just change and award a major business. Giving a 10% requirement or a 5% requirement, it doesn't mean much until the customers are sure and they know that they will get the same quality year after year, that they can allocate 30, 40, 50% of their business. So the acceptability of their product is still low, I would say. It's not that, they are also an approved vendor. But yeah, if they go in the market with a 35% lower pricing, it does put some pressure on us as far as only pricing is concerned. Because customers do ask us, and they also get doubt because everybody they also call the product a UHP product, although we know for a fact that it's not a UHP product cannot be made at this price, made and sold at this price. If somebody has used prime needle coke from these primary suppliers, then they actually cannot make it at that price at which they are selling. So we know that it's not that. And customers also somewhere, but they at least, customers give them a trial here and there. So there is some limited acceptability in some furnaces which are not as strong, weaker, or customers who want some saving upfront. That's about it.
Okay. So other than quality, is there any other requirement which the Chinese UHP warrant from the end client? For example, if of course it goes for electric arc furnace, but is it a different make or different different size of electric arc furnace which is more suitable for what China caters to? Or
for the lower diameters, they can still give their value proposition, sell at 35% cheaper and still give a 10-15% higher consumption. And for lower sizes, they still make it, but actually the world demand is more towards the bigger diameters, where they are still not as successful.
Mm-hmm. And so just to bring a context, would you have a approximate number that what would be total global UHP grade production ex of China or capacity?
It should be around, let's say, the capacity would be around 700,000 tons, excluding China of UHP electrodes. But again, at present, the industry is working at 50% capacity utilization. As an industry, I'm counting all the suppliers put together.
Right. But this is the total graphite you're talking about, or the UHP grade? I mean, can you make a distinction that way?
No, I'm talking about all the players, all the major UHP players. About the country, I've already told.
Okay. And sir, though, of course, China did mention about 20% target for steel production through EF route, and there's a apparent delay in that. So how much in percentage, how much is right now the production through EF route in China?
It's about 105 or something. When we close the year, we'll get the figures, but I think it's going to be around 105 million tons, which is, let's say, 10-11%. Or it should have been 20. So for 20, it means a lot. Another 100 million tons would have absorbed 200,000 tons of electrodes.
Okay. And about this, sir, again, coming back to the same figure, 100,000 UHP production from China. Would you have an idea how much of that would be exported from China right now, given that there is a delay in EF route production?
Must be around 50 to 50%. Because 50 to 60%. I don't have a hang of those figures from China, right, really, but that should be about it.
Okay, sir. That's quite helpful. Thank you so much.
Thank you very much.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. Manish Gulati for closing comments.
Yeah, thank you for listening to us, friends, and we look forward to speaking to you again with better visibility next quarter. Thank you very much.
Thank you.
Thank you very much.